So what is the most effective way or the most effective things you can do to make money in the market? Because that really, as a beginner, that's really what you want to know. It's very, very easy to get caught up in a lot of different things. There's a massive information out there, okay? And you know, it's how do you put all that information together to come up with a way of making money trading Forex? That's the only question. And you could waste years of your life in looking for what's called the holy grail of trading. But what I want to do is actually give you some shortcuts to that and make things very, very simple, okay? So one of the most effective ways to make money in the market is what I call patterns. And well, I don't call them patterns, they are patterns, chart patterns, okay? Because what you can see when you just look here is you can see that price is going up and down, up and down, up and down, okay? And so how do you make sense of price going up and down? Well, what we do is we start drawing lines. So for example, if I do a line across there, you'll see that price actually came up and it hit it, okay? And it hit it and then it bounced straight off it. If I do, let's find another one. If I do a line there, okay, and a line there, what we can see is that there is a channel beginning, okay? So without knowing anything, if I look into the future, okay, and I actually go onto shapes and I put a little rectangle somewhere here, and I put a little rectangle somewhere here, okay, what this tells us is that price, if it hits there, somewhere there, okay, it's going to be the third bounce off what we call a trend line. And if price hits here, it's going to be the third bounce off this lower trend line here, because it looks as if price is forming another channel. And channels and are patterns that you will find everywhere, okay? So here is another channel, okay? This is a widening channel and it's known as a megaphone channel. Okay, so price started there, bounce 1, bounce 2, bounce 3, so bounce 2 on the upper line. Then it came down here, but it missed, it couldn't hit this lower line there. So the pattern started to change, started to move, went back up there, bounced again off this trend line, and then the trend line failed and you could see it started making another pattern, okay? And that's what price tends to do a lot. It tends to form these channel-like patterns, okay? Going sort of bouncing up and down, up and down, up and down, and then basically they fail and they start forming other patterns. Let's do another one here. Okay, so you can see there's another channel, up and down, sideways move, then the pattern fails, and then it forms another up and down, sideways move. And then in between that, every so often, you'll get a huge move up or a huge move down, but most of the time, okay, you will see these patterns forming. And if you can shrink out the chart, if you sort of click here, this shrinks out the chart, it makes these patterns very, very clear. Now, why are these so powerful? They're powerful because there is an element of predictability, okay? And I say an element, it doesn't mean they definitely will, but it is it does give you an idea of where price is going to go next. And if you have an idea of where price is going to go next, then you can actually have a basis on which to trade. So for example, here is a pattern here, okay? I know that's a pattern probably like from here, for example, I can see that there is a little bounce there, there's a third bounce there. Okay, so I can know the bottom line. I don't know the top line, but I know this line here. So if I'm just trading, let's say, waiting for the next bounce off this line here, I pretty much know that it's going to bounce when it hits here, or even if I don't know it's going to bounce, I've got a place to look for a bounce. Okay, and then by the time it hits this second bounce at the top here, I've now got a second top line, so I can predict in advance that price can go here, and that if I was going to trade long, I would take my profits here. Okay, and so this is what patterns do, is patterns give you predictability in the markets. So another very effective way to make money in the markets is to only trade in line with the momentum on a higher time frame. So what do I mean by that? So on the one side, on the right, you will see that there is the 30-minute time frame, and on the left you'll see that there is the daily time frame. And if I go to properties, okay, and I go like that and I put the period separators in, and I do the same for the 30-minute chart, the 30-minute charts separators have a period of time, are each showing a period of time of 1 day. So these are the 30-minute, all these 30-minute candles here, this designates 24 hours, okay? And on the daily chart, this designates a whole month, okay? So this is April, this is May, okay? And this is the 16th of May. So this 30-minute chart here is represented by what happened yesterday. So what we can see is, if I go here and I start drawing some lines here on the daily chart, I can see that price is actually moving sideways on the daily chart, and that there isn't really momentum because price is crossing over. Okay, and in fact it's forming something that is called, what we call support and resistance. So horizontal support and resistance, if I draw that in here, this is what we call when price moves up and it hits a certain level and it bangs up against it, and then and it kind of moves away and doesn't go through it, we call that resistance. And this is if I put that there, you can see how these candles, this candle banged against it and closed below it on the daily chart. This candle here opened there, and then the next daily candle tried to go through it and it couldn't, and basically it didn't actually go through it till days later. So because we see all these candles moving sideways, not able to go through this level, we know that this is what we call a resistance level. And then what often happens is you'll find that the candles will move back, they will hit that resistance level and they will sit on top of it. So if you think of the resistance level as like a ceiling and you're banging your head on a ceiling, and it then forms the seat of a chair, and price comes and sits on the chair, or rather it may be a floor, comes and stands on the floor, and so this resistance now becomes the floor, the support that price can sit on. Okay, and this is also important information when you are deciding about where the momentum is likely to go, and how much momentum there is in the market. So we can see that these daily candles for basically the whole of May have just been moving sideways, and so that is going to make us, so when we do our trading on the lower time frames here, if we see what's happening here and we start putting in our, see there is another level there you can see of resistance. Okay, that is if we actually put those levels in to our 30-minute time frame, okay, which is probably about there, 1.29462, 1.29462, okay. That provides us with a good place to know where we're going to take our 7.1. It's nearly there, so we'll just put it down to 6.2, somewhere like that. Okay, so that provides us with a good place to take profits from. Okay, so what we're doing is we're overlaying these higher time frame levels, higher time frame support and resistance levels and trend lines. Let me color these green. I always color green for my daily trend lines and support and resistance. So we color those green, and then what we can do is we can overlay them. If I now go down to the 30-minute chart here, this daily chart, okay, all right, so I can now see the daily support and resistance on this chart, and I can now overlay the 30-minute trend lines. Okay, so I can now see this 30-minute chart, this 30-minute pattern in the context of a daily pattern, okay, in context of the daily support and resistance. And that gives me more information to know where the energy of the market is likely to be. Okay, so but what this also tells me, if I go back to the daily chart, is that there's not a lot of momentum in the market. Because the momentum, if you remember in an earlier video I talked about how I use this moving average. Here's the momentum on the pound US dollar, and because this fast moving average is moving very, very fast and the candles are exceeding the moving average, so really that's where I want to look for trades. But here the price is moving sideways, so the only sort of trades I would want to take here are these sort of sideways small moves. I'm not going to take big moves in the market. Now that's not to say that you couldn't take trades during this time, because you certainly can, okay, but you would only be taking very short-term trades, 20 or 30-point moves. Let's see how much there is there. Oh, well, this is a 70-point move, but you would only be taking small moves because you know that, looking here, that price is moving sideways between these two levels of resistance, and in fact there is another level here. Okay, you can see here that price on the daily chart has been moving between these areas. So this only actually gives you an area of about 58 points on the daily chart. So you will only, so that gives you a lot less than, for example, a lot less momentum and a lot less leeway than these sort of candles here, which are moving up strongly. Okay, so what you would want to do is actually go and look for what's happening here, for example. So let's go here. So you can see here now that price is moving with a lot of momentum, that the candles are big. There is still a pattern in the market. If I draw this pattern, okay, we're now on the euro US dollar. We now have a widening pattern. Okay, and the reason why patterns work, to be honest, I don't know why they work, and I don't think anybody could tell you really why they work. The only thing I would tell you is that there's an expectation. I think they probably work because they are easy to see and they are predictable, and traders look for predictability in the market, and the big traders, this is what they look at. They look at things like patterns and trend line breaks and breaks of support and resistance. So these very simple patterns tend to work very well. I told you I was going to make things very simple for you, and you don't really need to understand why they work, because I don't think anybody really does understand why they work. The key thing is to actually know that simple patterns, simple breaks, things like breaks of big round numbers, things like that. Those are the things that work in the market. You don't need anything complicated. You don't need any complicated indicators or anything like that. Simple patterns and lines are enough in the market, okay? But what you do need to know are where is the energy in the market, where's the momentum, okay? And so these simple patterns, by using these multiple time frames, that's where you can find your opportunities in the market. So here, for example, we didn't know that these 2 days here, we didn't know, if we go back, all right, we didn't know after this candle what price was going to do next, all right? But the thing is, we could see by doing these 2 lines here that a megaphone channel had formed. So seeing as we know that a megaphone channel has formed, we expect that the next thing, you know, is that price is going to bounce off this trend line here and is going to go in a certain direction, which is up. It's predictable, all right? And, you know, when you can see that there's these multiple candles here. It didn't actually form a third bounce, really, but there was a lot of candles here which formed this first bounce. It wasn't just a one candle bounce like this. So there was a lot of evidence that this diagonal line had a lot of strength to it, okay? And likewise, price bounced off this diagonal line here very, very smartly. So this is how you form these patterns. So this, we know before it happens that this is an area with an opportunity to go long. And then what we do, when I say go long, I mean go up in the market. And so then what we do is we go over to the lower time frame, and we're now looking for ways to enter into that move. Okay, so if I just put those lines in, so actually there's in fact, I won't go there. I'll just do this one here. Okay, if I go back down to the 30-minute chart, okay, so what we've seen now is, so on the 30-minute chart, all right, we would be looking for opportunities to get into this move. And when you look at the 30-minute chart, you can see some really good opportunities because we see what are called these sideways areas of support and resistance. Okay, so I'm going to go back to this orange line here. And what happens here is that price has moved sideways and it's formed this sort of coiled up energy. And so you can see here that price starts to move here, okay, it hits this area here, forms this sideways move, and then it starts to, after the weekend, these 2 lines here stand for the weekend, starts to again form this area, confirm this sort of area here of resistance, this sideways move, and then it breaks through with a big candle at about well, say 6 a.m. in the morning, but I think this is actually 1 hour ahead. So it's about 5 o'clock in the morning, 5 to 6 a.m. in the morning. Price bursts through this level here, and this is when, you know, we're expecting this. We're expecting this to happen. We've already seen the setup on the daily chart, and this is where we start to look for opportunities, low risk opportunities to get into this move. Now, if I just overlay this with a moving average, with the 2 moving averages to measure momentum. Okay, let's just do that. Right, well, let me come back to this in a second in the next video. So when I come back to this, what you can see now is what I was talking about before, is you can now see how price starts to move with momentum on these 30-minute charts within here. Okay, so this is what it looks like on the daily. This is what it looks like on the 30-minute chart. And so here are great opportunities to find entries into this move. And what you can do is, let's say for example we had an entry over here. Okay, let's say that was our entry. Then what this does is it gives us an entry. Let's say we entered here and we had a stop loss below a previous level, or below two previous levels of support here. Okay, so let's say we had an entry there and we put a stop loss there, so we can see here the middle number there, it says 187. It's actually 18, so that's 18.9. So the stop loss would be about 18.9 pips plus the spread which you pay on the euro dollar, which is probably about 1.5 to 2 pips. So that's a stop loss of about 20 pips. Now if you don't know what a stop loss is, basically it's an order you put there where if price moves against you, then it will protect you from losing all the money in your account. So you will actually lose 20 points. So if I put a stop loss there, if I was going to trade, went on that breakout and I put a little stop loss there, I'm going to indicate it there, okay, then if price turned around on me and hit that stop loss, I would be out of the trade. Okay, so but if let's say that, but as you could see that doesn't happen, and that's the reason we look for these sort of setups with a lot of momentum, because we don't want that to happen. Okay, and if you find a lot of momentum in the markets, that makes it less likely that it is going to happen. But so we could get into a trade that has a 20 pip stop loss, okay, at around the 1.09399 level. So let me put that in there. Okay, so now what you can see here is that if you put this level that's here onto this pattern, this daily chart, we already know, or we already believe, that price is going to move towards the other side of this megaphone channel. Okay, so this potentially, we can see in advance, has a potential of about 123 pips for a 20 pip stop loss. So our choice is that we could either take, which is about a 1 to 6 ROI. So we can either sort of just follow, we have the choice of either just taking our profits sort of near the top here when price starts to move sideways, which would be a, well, that's not a very big amount. That's like 37, that can't be right, hold on. 20, yeah, so that's about a 1.5 ROI, which is not very big in my opinion. I like to go for a bigger amount than that. Or what we can do is we can, when price moves away from us, we can move our stop loss to break even. So we move our stop loss up to the entry, okay, and then what we do is we wait for price to move towards this area here, and we take our profits then, which is what I would recommend. And the reason we do that is because we want to make the most of these trades when they come along, because it's the profits on these what I call high ROI trades, high return on investment trades, that are going to make up for the times when you take trades and they do turn around on you and you lose money. Because what's important to know is you will not win every trade. You do everything you can to make sure that you have a good trade, that you are likely to win on it, but you won't win on it. You know, a lot, not a lot of trades, depending on what systems you use, but you will lose a proportion of trades. And so by always aiming big, thinking big in your trades, you know, which is low risk trades with a high reward, these trades are the trades that will that will make up for the losses that you've had, and they will also give you profits. Okay, so that's why I always recommend to go for low risk, high reward trades. And so this is the foundation of the courses that I teach, which is to find ways of finding this high return momentum in the market using the daily charts or the 4-hourly charts, the weekly charts, the monthly charts, the higher time frame charts. You find where price is going to start moving with momentum, and then what you do is you go down to the lower time frames and you find ways of entering the market with a low risk entry, and you go for a high reward. So all my systems, my trading systems, are all based off that principle, is to find these low risk, high reward entries into the daily or 4-hourly or monthly momentum, so that you will make a profit overall on your trades. In this video, I'm going to now put those two things together to show you how using top-down trading by analysing the higher time frame and then going down to the lower time frame to find good trades that you can enter with that will give you a high ROI trade is actually very, very simple. And the reason I'm doing this again is because I want you to realize that actually trading can be quite simple, but what's most important to bear in mind is the principle behind the trading, which is going for high reward trades. So if I take this chart here on the daily chart, let me just shrink it out a bit. And what we want to look for are good patterns on the daily chart. So we want to find where are the areas of energy likely to be on the daily chart. Well, the first thing is, in fact, let me just do this. The first thing is, when you shrink out the monthly chart, is that there is a level here which is a very powerful level. This is called a resistance level, a monthly resistance level. And what you can see is that when price reached this level, which was about the 124 area, it reversed very strongly back in 2006. I think it was 2006, 2007. Okay, 2007. And it hit that area again in 2015, dropped down significantly, and now price has pulled back and hit another level of monthly resistance. Okay, so if I just go through here, if I just enlarge this a bit, you can see that what we've got here is what is known as a resistance zone, because this is where candles are closing and where they're spiking down to. So this has actually created a little zone. Price pulled back up to this zone back in at the end of 2016 and reversed from the zone and is now making its way down. We don't know what it's going to do next, but what we do now understand is what's happening on the monthly charts. This gives us a context to understand what's happening with our trades. So when we go down to the daily chart, we can see all the monthly lines, and we can now understand why the daily chart is behaving as it is. So let's draw in some daily lines to see where the daily energy is. Okay, so if I just put these here, this is called a trend line, and what you can see here, if I just bring it down a bit, okay, is that this has actually created a megaphone channel. I've drawn it a bit roughly here. And what I do is I colour the lines different colours so that I know the difference at a glance between what is a daily line, what is a monthly line, what is a 30-minute line, and I can see it all on one chart and it's very clear. So these are now my daily lines. Okay, so this is the area that we're interested in, okay, which is where, now you can see actually when we start to make it larger that actually these trend lines are more fanned out, that this is the outer trend line here and there's a little inner trend line here as well, okay? But I don't want to confuse you about that, so I'm just going to remove the inner trend line. That's not important for what you're learning at the moment. So we can see that price hit this trend line, and if we hadn't known that, let's say we were looking at this, okay, because remember this is all about being able to predict the future. We can't really predict the future, but we can look for where potential areas of energy will be, okay, where potential areas of diagonal or horizontal support or resistance will be, and we can make a prediction about what price will do on the basis of probability. And so when we move forward, because we know, for example, that price has been bouncing off this lower diagonal trend line, we can predict that if price hits this lower diagonal trend line, it is a place of energy, high energy. It will either break through or it will bounce and it will go back up again here. And if it goes back up again here, which it does, this is an area that we could look for a trade, what's called an upward, a long trade. Likewise, we know that if price hits the opposite side here, there's going to be a lot of energy in that move, and it will either break through or it will carry on down. But we know that the overall energy is down because we've got an area here of very strong monthly resistance. So we're looking now for a short trade, and we know this by the time price hits here. We know that. We don't want to get involved if price breaks through, but we want to see if price goes down, that's what we're getting prepared for, okay? So this is how you are already looking into the future by going on the higher time frames. And then, in fact, if I actually now just go down to the 30-minute time frame, this can actually make it easier. So we can see what's happening on the daily chart. Okay, so now what we want to do is put our channels in place, our 30-minute channels, to actually find ways to enter into this move to get these high ROI trades. So now what I'm going to do is I'm actually going to use an orange color, which represents 30 minutes or hourly, so I use orange for that. And we can see that on the 15th and 16th of May, we started getting this megaphone channel, okay? And there was a key area, a key moment here, which happened on the 12 o'clock on the 16th of May. If I put a little shape there, okay? And it was the third bounce off this upper trend line, and it was a widening pattern. And if we had found a good entry here, which we could have done, because we know, if I just move this down a bit, we know that because of you know, the area of probability, because price makes these patterns, we are looking for an entry to go short into the move, to go down into the move, and then what we want to do is put a stop loss on and hold on to the move to get a very good risk reward. So if we had entered, let's say, and got an entry of, let's say, 25, a risk of, let's say, 25 points on the move, at this point would be, well, at this area here, we would have been down to, you know, we would have got a 1 to 10 ROI on the move, which is actually what I teach in my trading course, the 10 times ROI system, which is part of the high ROI trading course, which teaches you all these things. So that's it, but that is just putting two very, very simple things together, which is using the higher time frames to drill down and to find out, to predict what's going to happen in the future, and then looking for opportunities, very low risk opportunities on the lower time frame, and high probability opportunities because you have the daily or the monthly energy behind you, so it's more likely that price is going to move with momentum and force in that direction. By combining those two things together, you can achieve your goal, which is to get high return on investment trades. I hope you found this short mini course a useful preparation for your trading, and I wish you the very best in your future trading career.